Someone who hit pay dirt, having nothing to do with the lottery. This California outfielder, Mike Trout, finalizing a $430 million deal to stay with the Angels in Los Angeles. But PricewaterhouseCoopers partner Mitch Rochelle says that Trout could face a major tax bill as a result. I guess it's all how it's allocated, right? Explain how that would work.
So basically, the 37% federal tax, he'll be in the top bracket. There's a question as to whether or not he lives in California or New Jersey. California, because his residence on paper in some places says New Jersey. California is the highest state for income tax in the country. The second highest, New Jersey. So he didn't exactly pick the right team. If he was looking to be tax efficient, he could have gone to Texas. He could have gone to Florida, where they had no state income taxes. But not to get overly technical, when you are an athlete and you play on the road, you actually pay taxes in the states in which you're playing. So a lot of the country is going to benefit from the largesse in his new contract.
They're going to spread the wealth. That is weird with baseball. I guess it applies to other sports, too. They must need a SWAT team of accountants just to handle, all right, I played 3 games in this city, 4 games in this city. How do they do that?
They actually just do it that way. It's proportionate. Some states have sort of wonky rules about the way it works. The good thing is you get a credit in your home state for taxes you pay in another state. But again, Mr. Trout picked the most expensive tax state in the country. So the credits that he'll pile up around the country are not going to really get him out of that 13% tax rate in California.
So no matter where he is playing, I mean, he's going to be facing this, but he picked a high tax area, period, to stay with. I'm wondering if I could switch gears, Mitch, to this lottery potential winner and what he or she takes home, assuming it's a single person. There's always a rule of thumb is just take the upfront money, take the cash, don't spread it out, because you never know what's going to happen to governments and all of that down the road. Do you subscribe to that?
I think I subscribe to going into the donut shop where Hillary was and buying the donuts. I'm the worst ever for this stuff because I'm a complete idiot and I buy tickets downstairs in the lobby here like a complete lunatic. My lucky store happens to be the one that Fox is in. I've won a whopping $10 over the last 4 years. But yes, I would take the money up front. Not that the credit worthiness of the Lotto Commission is not there, but why not just take the lump sum up front and pay the taxes and be done with it?
Yeah, so are you done with it? In other words, once you pay all those taxes up front and you file, let's say, the following year, Uncle Sam will see you at obviously large winnings, but it will also see that you've prepaid your taxes, right?
Right. There are withholdings that are taken out of the top, and then obviously you would credit those withholdings against what your ultimate tax liability would be, and most likely have to make up a difference if there is any. But at the end of the day, it's still a huge amount of money after taxes, which is also, going back to the first story, the same for Mr. Trout. Even though the tax liability is going to be high, he's still making a ton of money.
Yeah, it's a nice problem to have, right?
It is a rich person's problem.
All right, and who knows that better than you, Mitch? Thank you very, very much. Just the idea that you could possibly win a lottery, I would be so uncovering that story about how unfair that would be.
Yeah, but, I would come to do a hit at Fox Business Network the next day.
Just to rub it in. Just to rub it in.
I'll bring the donuts.
Yeah, I bet you will. Mitch, thank you very, very much.